video. In today's video, I want to give you guys your usual breakdown and go over what we have on here or what we have on our watch list from a technical and a fundamental perspective. Now, and as always, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video, consider smashing that thumbs up button there as well. Special thank you for all of the members on the other side. Really appreciate the support, and also thanks to everyone that takes out their time every day to watch the video. If you're looking for mentorship signal services, I'll leave a link to my website in the description below. Please go and check it out, especially if you do consider trading a funded account. Now, let's just jump straight into the data. Now, there is no there's nothing else that we cannot start to speak about other than the job report that came out on Friday, which was the NFP data. Now we saw that the unemployment rate actually came down from 3.7 to 3.5 in September, and also added 263,000 jobs as the labor market stays strong, which is very, very which has got the very big question in our heads. If you're not sure what the NFP is, it's basically the non-farm payroll. It's basically a report that comes out every month, basically the first Friday of every month, that tells us how the labor market's doing in the USA. Also, it says here the non-farm payroll increased 263,000, like I said, sort of what the Dow Jones estimate of 275,000. The unemployment rate came through at 3.5, which is good because it dropped by 0.2%, meaning that the unemployment is coming down. And as the labor force participation rate is lower, the average hourly earnings went up by 5% from a year ago, slightly below the estimate. It also says here that the leisure and hospitality, healthcare and business and professional services led to sector gains. It says nothing there about technology. It just tells you that things are not going too good for the stock market. But however, what I do want to bring to you guys' attention is it's right here at the bottom of the article. It says that the report came amid the report comes amid a months-long Fed effort to bring down inflation, running a near its highest annual rate in more than 40 years. It says here the central bank has raised rates 5 times this year for a total of 3% basis points, and is expected to continue through at least the end of the year. Now, there's still one hike left for this year, which I believe is on the 2nd of November, but we're going to come to that now. It says here, despite the increases, job growth had remained relatively strong as companies face a massive mismatch between supply and demand that left about 1.7 job openings for every available worker. That in turn has helped drive up wages through the increase in average hourly earnings has fallen well short of the inflation rate, which most recently was at 8.3 there as well. It says also here the report really just show that the consumer and corporate side have been very resilient despite the headwinds of the Russia-Ukraine war. Rising interest rates and slowing housing market, Rhodes said it could add to the story of a soft landing for the economy for a while. It seemed very elusive. So it was very good to see that the US are continuing to add to the labor market and that the unemployment came down. However, this doesn't deteriorate the Feds from hiking interest rates moving forward, because inflation is still at a sky high. And what the most important news event that we are going to be looking out for this week is going to be on Thursday, which is the CPI, which is the Consumer Spending Index. Anything higher than what it is now, could definitely expect the Feds to be very aggressive in the last rate hike there as well. And we can see also here that this is a report from Bankrate. It says here, in an update projections, the Fed signal plans to lift rates by another 1.25 percentage points before the year is over. Now, if we're currently sitting at, we currently sitting at a 3.25 basis points. If I do speak correctly, the 2nd of November, we should be, here we go. Yeah, we're currently sitting at a 3.25%, right? If the anticipation is for the Fed to get to a 4.25%, then that means we could potentially see the Fed hike the interest rates by a full basis point coming in at November. And then we obviously got December there as well. I just need to confirm that 100% now that I see it over there. So there's nothing on the calendar about that, but I've just noted there is a another rate hike, a potential rate hike that we could see come through even further. But the expectation for the Fed now to hike interest rates by 0.75 basis point has now increased once again, and investors are now once again betting that the Fed is going to hike interest rates, and we could see the same impact that it had, before when these rates were announced. We can obviously see that come through there as well. So you can see the Fed has started with a 25 and the 25, 25, 75, 75, 75. That we can get another 0.75 basis point coming in November. And like I see here, we've got another one coming in December. So if we do get another one in December, then we could potentially see a 0.50 coming through. But for next month, you can definitely expect the Feds to hike the interest rate, which is definitely going to further negatively impact the stock market and further drive the dollar index up. But again, the important data for this week is going to be the CPI. Also keep in mind that on Monday is a bank holiday for the USA, and I know some people are probably still going to go out there to trade, although there is no trading opportunity. So like that, but we have to trade. That's fine. You can go in there and you can do whatever you want to do. But it is a bank holiday, so the markets might just be moving sideways for the lateral part of that day there as well. So now that we've got that out of the way, it's important that we look out for that CPI data on Thursday. But we have the data that we received last week, which came out very positive, but it still raises concerns in terms of of why the job market in particular has been growing so significantly, which signals higher inflation and ultimately higher interest rates there as well. If it's your first time hearing about the NFP and basically how it affects the dollar, it's the dollar basically is the most affected currency by the NFP, because the NFP is basically a gauge of the economy's health. And if you know that in order to measure a country's currency, you need to understand how their economy is going, and we use the NFP data to gauge whether the economy is good or bad. And this is also an indicator that influences the FOMC's figure. It has a massive impact on interest rates as well, and it can we've seen this move the dollar all the time. So when the NFP is positive and trending positive, especially the hourly wages, you can expect to see the dollar exhibit bullish behavior. Better than expected data is a possible catalyst depending on the inflation situation there as well. Also keep in mind that if underlying core inflation as read by the PCE price index is running tame, it may not matter if hourly wages are running hot. Ironically, what this means is hot wage gains are good for consumer, which is also good for the overall economy there as well. Now, the dollar index normally influences every currency pair that trades against a dollar, which is the Euro USD, GBP USD, USD JPY, USD CHF, and any other USD dominated pair, including Bitcoin, the BTC USD there as well. Now that we got that out of the way, so we're expecting a stronger dollar, and we're also expecting CPI data to be released this week there as well. Now, before we get there, it's always good to understand, based off a technical analysis there as well, which is exactly what we are going to discuss. Now, we're going to start with the dollar from a technical perspective. Now, if you're going to ask me whether the dollar is going to hit this level here, I'll tell you yes, it's going to hit there as well. But it's obviously going to take some time and a lot of patience for it to get there as well. Now, if you start on the monthly time frame, we can see that the market had not moved much based off the last analysis that I did. The market is still trading below this strong level of resistance that the market's now testing as support. Now, we're going to use this as an indicator from a technical perspective to make sure that we do align our price action with this level there as well. From a weekly perspective, you can see how this previous level of support that it acted as a resistance is now lining up perfectly with this previous level of resistance on the weekly time frame there as well. From a daily perspective, what do we have now? From a daily perspective, we're going to use that as an indicator, as a level of resistance. Now, the market also broken above this level of resistance over here that is now acting as a level of support. Now, next week Monday or tomorrow, like we know, there's going to be a what you call it, a bank holiday. So we could potentially see the DXY just moving sideways. But for the lateral part of next week, I do expect the dollar index to basically clear this line over here, and then potentially based on the CPI data, we could potentially see the market pull back slightly. So going into next week, I'm expecting the dollar to increase in value to about that level over there. If the market wants to go higher to grab some liquidity to the upside, then by all means, that would be a good thing to see there as well. And the reason why we don't expect the pullback is because the market had not completed this impulse yet. So we need the market to complete this impulse and then that correction before that continuation. Potentially to 120 as identified from a monthly perspective. Next up, we've got the Nasdaq 100, also very much in bearish territory, also now trading at this key level that it had been testing once again. But we can see that this time the market had closed on the monthly time frame. If you look at that level over there, not the wick, but you can see how the market had broken and closed below this level. Definitely expect the Nasdaq to continue lower in the long term, as we expect the dollar index to hit 120. We expect the Nasdaq to come back and hit that 9,000 level once again. Now on the weekly time frame, what do we have? Now from a weekly perspective, we can see here, if we look left over here, the market is currently trading below structure over here, but because we've got such multiple structures, we can see that the market had broke below this strong level of support over here. It's gone above that, came to test that support once again, broke below that, came to test it as resistance. Now, because we are retail traders, we obviously need to consider short-term targets in the market, and I'd probably say that would be the short-term target for the Nasdaq on the daily time frame. What do we see now from a daily perspective? We can see here this is a key level that the market had broken below. This level over here acted as a level of support. The market broke above that, came to test it as support again, broke below support, became resistance. Resistance didn't hold. The market then came back to test it as support, again broke below support. So we expect a slight pullback before that continuation to the downside. However, I do see a slight continuation to the downside for the Nasdaq, a pullback, and then that continuation to the downside there as well. So that would be the best way to approach the situation from a technical perspective. Next up, we've got the Dow Jones on the monthly time frame. The market had broken below this level of had broken below this level of support, came back to test it as resistance. The market is also trading at this level of support over here, kind of giving a signaling to us, because we expect the market to continue lower, and we can definitely expect the Dow Jones to come lower and probably hit this 26,000 level that it had created in the past over there. Also on the weekly time frame, what do we have now? From a weekly perspective, it's clear that the market is currently at this level, as we've spoken about earlier, but we can also see now how the market had broken below this strong level of support, came back to test it as resistance there as well. Now that we do anticipate the move to the downside, it's very important that we do trade in the bearish territory. Okay, not so, just ignore that, my good friends. Next up, we can see how the market had tested this previous level of support. Printed support went up, that came back to test it as support, broke below that, tested it as resistance, market broke above resistance, came to test it as support did not hold. We are now faced with new structure in the market that's allocated at that level over there as well. But because we do expect the market to continue lower, I do expect a pullback based off the price action, and therefore continuation to the downside for the market to go and test that previous level of a weekly support there as well. The S&P 500 obviously printing similar price action to the Nasdaq. We can see the market is expected to drop further low to come and test this level here as well. Going straight to the daily time frame, we can see the market is now also currently testing this previous level over here. But if we do take this level above here into consideration, this level over here acted as a strong level of resistance. Okay, the market broke above resistance, came back to test it as support. Now I would expect the market to pull back slightly, but I would obviously want to see the market pull back first and then continue to the downside. In doing so, the market would then print this head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Next up, we do have Euro USD, which is also now currently being considered a very strong currency. But if you start on the monthly time frame, Euro USD still has clearance to the downside to go and fall that week on the monthly time frame. Then we also have now opportunity for the Euro USD to fall even lower on the daily time frame. We can see how the market broke below this strong level of support, came back to test it as resistance. And on the daily time frame, we can see how the market also once again had broken below this key level over here. This level over here acted as a level of support. The market broke below that and so we can expect the market to come back to test it as resistance. We have this massive impulse. So after an impulse, you expect a correction, and you expect the correction of the 0.382 to line up perfectly with that structure. Going into next week, I do expect this market to continue lower, pull back, and then continue that move to the downside there as well. Next up, we do have, what do we have next? We've got gold. Now, if you have traded gold, the last time I did the analysis, you should have made some good money, as I anticipated gold to fall back lower. Now, there's still some room to the downside for gold over there. So we definitely expect gold going into next week to continue lower. From there, we have to monitor the price action and then make an informative decision based on whether or not we're going to hold that trade over there. The reason why I got USDJPY on my watch list as well, because I've been watching this pair for quite some time, and there's a very good opportunity to trade over here. Firstly, the market is currently sitting at this strong level of and I'm just going to use any rate tool over here. So the market is currently had broken below the strong level of resistance. Now the next key level over here is sitting at that 159 yen over there. So basically the continuation of on here is definitely expected. Now on the weekly time frame, you can also see that we had a weekly close above this level there as well. On the daily time frame, you can see how the market was stuck within this consolidation phase, right? The market had consolidated for an entire week. Let me just do that, and then on Friday we finally saw the break above that area. So I definitely do expect this this continuation on the on the USDJPY to take place. It's just for the lateral part that the Japan yen government do not want to hike interest rates there as well. Guys, that is all from my side. Let me know your thoughts in the comments below. Thank you for your time, and as always, cheers for years.